Welcome to this ILA trustee workshop, our third offered in 2022. I'm Kathy Caudill, the Vice President of the Ela Area Public Library District in Lake Zurich, Illinois, which is located about 45 miles northwest of Chicago. This is my 19th year of board service, and I'm also currently the president of the ILA Trustee Forum Board. What does the ILA Trustee Forum Board do? Well, we plan continuing education programs for trustees, including this program. We recommend topics for Trustee Day at the ILA Annual Conference. Do mark your calendars. I'm excited to report, and I know Cindy is excited to report, that this year the annual conference will take place in person at the Stevens Convention Center in Rosemont from October 18th through the 20th. The concentrated trustee programs actually take place on October 20th, but trustees are definitely welcome to register for the entire conference. In fact, if your schedule permits, I would strongly encourage you to consider attending all 3 days. I always come back with a lot of information to assist me in my library board service. Another important task that the Illinois Library Trustee Forum performs is selecting the ILA Trustee of the Year award recipient. You can nominate a trustee colleague or yourself for Trustee of the Year. This is a great way to recognize and honor a trustee who goes above and beyond in their library service, while also sharing their talents with ILA, the Rails or Heartland Library Systems, or national library organizations like ALA or PLA or United for Libraries. The nominations deadline has just been extended to May 28th, so check out the ILA website for more details about the nomination process. The Library Trustee Forum Board meets 4 times a year via Zoom, and our next meeting will take place on Thursday, June 2nd at 7 p.m. We'd love to have trustees from across the state, from libraries large or small, consider serving on the forum board. If you're interested in learning more about this, just check out the Trustee Forum page on the ILA website, and you can send me an email. My contact information is listed there. But today I'm delighted to welcome back today's presenter, Jamie Racklin. Jamie's the founder and president of Meristem Advisors and was a public finance banker for 25 years, where he covered municipal issuers ranging from state issuers to local municipalities, including school, library, airport, and other special purpose jurisdictions throughout the Midwest, focusing primarily on Illinois and Indiana. While at prior firms, he also served as a banker to the Indianapolis Airport Authority, the Chicago Park District, Cook County, Illinois, and Chicago City Colleges, among others. Jamie's passionate about helping his clients achieve their financial goals and works with each of his clients to design strategies tailored to their individual circumstances. He is proud to serve on the boards of the Old Town School of Folk Music and Open Lands, and he holds an MBA in finance from the Wharton School of the University of Pennsylvania, an MSc in civil engineering from Princeton University, and an AB in computer science from Brown University. Some of you may have attended Jamie's Trustee Forum workshop in May 2021, when he discussed Library Finance 101, offering us an overview of basic concepts. Or perhaps you heard him speak in May 2020, just as COVID was having a shelter at home. In that free Zoom webinar, when we were just figuring out how to serve our patrons when our physical buildings were closed, ILA's Bigger Than a Building initiative was a lifeline for trustees and directors, and over 750 people attended that webinar. And Jamie shared valuable information about how libraries could consider handling various budgetary implications as a result of COVID. So today we welcome Jamie back to speak with us about streamlining the budgeting process. He plans to take us on a deeper dive into budgets and appropriation, levy ordinances, and other legally required reports, and we'll discuss how to relate these documents to a library's budget planning and process so that everything flows together smoothly. Thanks, Jamie.
Thank you, Kathy, and thank you, Cindy. Thank you, everybody, for being here. And I didn't realize we were reading the whole bio there, so that was a lot. So, so thanks.
Well, there was more, but I tried to hit the highlights.
Terrific. No, and as Kathy said, we've spent a lot of time often in the past couple of sessions focusing on the levy and how that works and some of the details in that calculations, but lost in that process was really sort of the bigger picture. What's going on with these documents that and processes that you go through. And I thought that merited some attention so that you as trustees know at a high level what you can expect every year you're going to go through these same things. So let me share my screen. And I'm counting on everybody being able to see this. And again, as Kathy said, we just want to streamline this. We want to make sure that the trustees know what to expect as they go through the year here. So basically you can count on, and if you've been a trustee for a while, you know that you go through this process every year of doing a budget, which is, we'll talk more about each of these as we go through. But first is a budget, which is just a statement of your revenues and expenditures that you expect to have during the year. And then you're going to do an appropriation, which is an allowance for what you can possibly spend at a maximum, right? So there's an outer limit of what you can spend line by line. And that's something that you actually have to take board action for and pass that appropriation. And then you have to do the levy, which provides the revenue for each year. And that's a separate process and document as well. And the levy, again, we're going to go through all of these in greater detail, so I don't want to take too much time here. But the levy is basically 95% of your revenue. So you want to make sure you get that levy, those taxes, correct. After you do all that, the county takes your information. They're going to do some calculations. They're going to actually extend the collection, extend those taxes. And then, of course, they get collected when people pay their tax bills, and you get your money. And you might not collect everything that you extended because some people don't pay their taxes. And there are sort of conditions around each of these items. So, for example, when you budget, if you budget something that's greater than you appropriate, right? The appropriation is the maximum you can spend. So if you budget more than you appropriate, you're not going to be able to spend all that money in your budget because you didn't appropriate that money. So the appropriation relates to the budget in that way, right? And similarly, again, if you're levying more than you appropriate, it goes the same way, right? If you're levying more than appropriate, you're levying more than you can spend. So you can't do that, right? Because otherwise, what's your justification for levying that money? So these three things have to work together, and that's what we're going to focus on in the process of this discussion. All right. So with that, the biggest problem that people have is how these documents and this process works together, and that's because it is confusing. But hopefully we're going to straighten that out. So the way this works, this is kind of the fiscal year and the fiscal cycle for a library. And typically, if you're a district library, your fiscal year runs from July 1 to June 30th of a given year. And you can see that. So if we're looking at the fiscal year 2023, it's going to run from July 1 of 2022 to June 30th of 2023, and that's your fiscal year. Other municipal libraries could have an April to April or an April to March fiscal year, or sorry, that would be a May 1 to April 30th fiscal year, or a calendar fiscal year. So bear in mind that your specific situation may be a little different, okay, but similar. So here we have a district library. You're going to be doing your budget about now for 2023. Many of you in your next meeting or your last meeting will be discussing that budget. What do we expect to actually spend in this coming fiscal year? But after that's done, you're going to do what's called your budget and appropriation ordinance. All right. And it's going to be, you're going to say, what's going on here? Because it has that word budget in it. But bear in mind that B and A, well, you might include your budget. It's really the appropriation. It is not your budget. When you do that B&A, it's the appropriation. You're stating the maximums. We'll talk more about this. You're stating the maximums that you can spend in any given area or for any given line item. And so that appropriation is different from your budget. Okay, so I'm trying to get you to separate these concepts in your mind. And then once that budget and appropriation is done, you're going to do your levy. And again, the levy relates to the B&A because remember, we can't levy more than the appropriation. All right. So you have those three things. And then the other thing I just want to say here is when you go through these processes, yes, you're doing your budget for fiscal year 2023. That hasn't started yet for you, right? You're needing to plan for what you're going to do next year for fiscal year 2023. And when you do these documents, the B&A, okay, it's going to say in there that it's for fiscal year 2023. And that's because the law specifies that that's what you're doing. You're doing your B&A for fiscal year 2023. And when you do the levy, it's the same thing. The document itself is going to reference fiscal year 2023. So everything seems pretty straightforward up to this point, right? I'm doing my budget for 2023. I'm doing my B&A for 2023. I'm doing my levy for 2023. Here's where everything goes a little bit astray, okay? The problem is that when you do your levy, right, you're going to file that for this coming year. It's going to be the levy that goes in place at the end of the year. You can file that in December. And the money for that is going to come it's not going to be usable until fiscal year 2024. Why? Because when you file your levy in December of this year, right, you're going to get that money probably, most of you, in June and October. And when is this, right? This is the very end of fiscal 2023 or the start of fiscal 2024. So even though this document says it's for fiscal year 2023, really the revenue that you're talking about is going to be for 2024. And I have this sort of shaded gray triangle here because in Cook County, you get that first distribution in March. And so it could be even more complicated for people in Cook County because the question comes, this little bit of revenue, what does that belong to? Some people treat it as revenue for 2023. Some people are for fiscal year 2023. Some people use it for fiscal year 2024, right? So it does get confusing, but the best I can say here to make it not confusing, right, is just accept that these documents legally have to say fiscal year 2023. All right. But ultimately what they're doing is setting the stage for your revenue for fiscal year 2024 right now. Okay. So it's always going to be a year in advance. But don't think that what this process is actually helping you with fiscal year 2023. It's just the way the law is written. When you do your B&A, when you do your levy, it talks about the current fiscal year. But those revenues are going to be not really available to you until the next fiscal year. So just separate them in your mind. I think it'll be clearer. Don't try and make sense of it, just accept it. The other thing which is advantageous about this, right, is that right now, when you're doing your real budget, the real numbers for 2023, because of this lag, right, it's actually helpful to you because you've already put the levy for this budget year in place the prior year, right? Those prior, that prior levy is just like this one is until next year. That prior levy is the levy for this year. So we know what that is now pretty much. And so you can actually do your budget properly because you know there's no guessing about what your revenue is. You have a pretty good sense of that for the current fiscal year. So hopefully that all makes sense. All right. And it'll make more sense if you just, like I say, accept that these documents talk about the current fiscal year, but in reality, it's money for the next fiscal year. And by the way, if in the chat you have a question, you're not following something and it's going to make it hard to continue on the conversation, if I don't answer those questions, please put that in there and I'll count on Kathy and Cindy to interrupt me. Okay, so just to make this clear, think of it this way. All right, you're doing your budget for the current fiscal year, right? And we have the revenues from the prior levy to help with that budgeting process. And that's what you're actually going to receive and spend. And that's what you're really planning for the library to do. But these other two documents, even though they say they're for fiscal year 2023, they're really setting the stage for fiscal year 2024, which you're not even dealing with yet, right? You're just setting the stage there. Okay. Oh, and last thing, I'm going to repeat myself here. Remember that your appropriation is what is the higher limit on what you can spend. So your appropriation, whenever you do it, has to be more than any of your budget line items and line by line. And it all, because you can't levy more than you appropriate, it also has to be bigger than what you ultimately levy. So when you see this B&A, we'll see in a second, those appropriation numbers tend to be very high. They're not your budget. They're not what you're actually going to spend. They're just what you're allowing to have happen. Okay. So with that, hopefully that's all square. I'll give a pause in case anyone wants to ask a question before we dive into these elements individually.
There is one question so far, Jamie. If the revenue is for 2024, will that be reflected in the first tax distribution in Cook County, usually in March in 2024?
Yeah, so right, or next year in March of 2023 is when you would get wait, now I got to think for a second. Yep, it's 2022 right now. So your levy that you file this December, right? Your first revenue in Cook County is going to come in March of 2023, if I'm understanding the question right. And I can't answer that question because some districts treat this March distribution as belonging to the current year. Okay, so they use that as current year revenue. That's often the case, I would say. But some libraries will defer this revenue and say, even though I'm getting this now, it really belongs to 2024. So it depends on how you set yourself up from an accounting perspective, whether you count this first distribution as current year revenue or next year revenue. And you just have to look or ask your auditor what you're doing or your accountant, how that's being treated. Okay. Hopefully that answered the question. If not, ask again. Okay, so let's talk about the budget. So the budget, real briefly, is basically a statement of your expected revenues and expenditures, and it allows you to track where you are with respect to your cash position. And cash is very important, right? Especially this year in Cook County, where tax distributions are coming in 4 months late. If you didn't hear about that, you should be aware of that. And you need to sort of I always talk about this. You need to maintain a good cash balance for just this type of situation. What happens if we don't get cash for 4 years, for 4 months? Can we make it through? Can we carry our bills for that long, or are we going to run out of money? Hopefully that's not the situation. But basically, if you think about your budget, it's your beginning cash, right? Where you're starting from, plus your revenues, less your expenditures, and revenues less expenditures is your income. And you take that net income and add it or subtract it from your beginning cash, you're going to get your ending cash balance. And the question is, do you as a library have policies as to how much cash you want to have at all times? You should, so that you can make sure you're staying within those requirements. And I like to think of the budget as a sort of an expression of your strategic priorities, right? Where are you spending your money? How much are you spending on personnel? How much are you spending on materials? How much of what you're spending is consumed by just running the organization? And are those things in balance, relative to how you want to be spending money? If materials is a priority and you're spending the minimum 8% of your budget on materials, should you be thinking about spending a little bit differently, right? Or, this year is going to be a challenge, right, with wages. If we have to increase wages to attract good people and retain good people, what does that mean for our materials? What does it mean for how we run the library, So this is really your opportunity every year with the budget to think about those questions. And rather than, sometimes I think there may be an approach of, this is what we spent last year. We'll talk about this in a second. This is what we spent last year. This is what we're going to spend this year, right? And it's just an increase, or it's the same thing. Really think about the budget as what are you trying to accomplish? And ordinarily, right, it is possible to go from last year to this year pretty seamlessly. Everybody, you do a 2% COLA on your wages. Materials, you're just going to go up with inflation, and things like that. This is going to be harder than most this year. You're going to have to really focus on the budget, because last year and even the year before were abnormal due to COVID. Some people had enormous income over the past 2 years because they weren't spending money. And now all of a sudden we have inflation. So last year may not be a good guide for doing your budget for this year. And you're going to have to really sort of challenge some of your assumptions, and really, you might want to ask those questions, about what's going to happen with costs this year. And have you really taken into account, utilities, which could go through the roof for you. I don't want to overstate that, but those could be going up. I've heard numbers 30, 40, 50%, or even more in some cases for things like electricity. And if you're not going up like that, why not? Are you under a contract that has protected you from these fluctuations? When do those contracts end? And when are you going to be facing those types of increases? So, it's worth probing this year a little bit as you see that budget, and having a good walkthrough on that. Okay. There are a bunch of different ways to do budgeting. You're not doing the budgeting as trustees. The library director, the library business manager is, but all the same, it's worth knowing how they're budgeting. And there's easier and harder ways to budget, right? The easiest thing is we just take what we did last year, increase it by a percentage for inflation, and good to go. Very simple. If you're in great financial shape, that's pretty easily, and it's stable conditions, it's pretty easy to justify that, right? Just what's to be unexpected. Next stage down, maybe value proposition, like we were talking about before. What are we trying to do with our budget? Where are we trying to allocate money so that we're strategy focused? Even within line items, how are you going to spend money differently this year than last year in order to achieve specific objectives? Are we really trying to accomplish something? And then the hardest one is sort of what they call zero-based budgeting, which really isn't going back to zero, but except in the extreme form, but you're really saying, okay, what do we forget what we spent last year entirely, right? What do we really need to do the job right this year? And you show me from ground up what we're spending money on and why we have to spend money on. That's the hardest one. And, those are the concepts. When it comes to implementing, it's also a little more stressful as you go from that sort of simple, don't challenge anything place to you tell me exactly why you need money, and then I'll decide whether I give it to you type of thing, which is obviously much more stressful. On the other hand, there's a lot more financial accountability as you move from that very simple type of approach to that more rigorous examination. And I'm not telling you where to be on this sort of continuum, but it's worth thinking about your specific situation, both financial and strategic, to figure out sort of where you want to be. And you might actually, do it differently one year to the next. Say, this year we want to do a deep dive. But once we've done that, we can float for a couple of years because we know we've got everything straight. Other things to think about this year that I think are going to be priorities relative to prior years when it was easy, because this may be a difficult year coming up. Does your board have a cash or a fund balance policy? Have you set sort of a goal for what the minimum cash, minimum reserves that you want to have are? so that you can be keeping an eye on your financial health and make sure because of what's going on with budgeting, because of what's going on with inflation and wages, that you're not inadvertently putting yourself in a financial position that is counter to your policies or counter to your goals. This might be a time, I'm not saying it is, but just types of things you might ask is, do we have enough surplus cash? Should we be budgeting for a surplus for positive income so that we can be building up our cash? Or the contrary, times are really tough. This year, we do have a lot of cash. Maybe this is a good time to just use some of that and bring it down in the hopes that next year things will get better and we can balance out. Remember, even if you have a ton of excess cash, right, you don't necessarily want to get into the habit of using that or drawing that down, because eventually you're going to run out of the excess cash if you do that. And then you're going to have to make those tougher budget decisions. So I'm always one to say, if you're going to face a tough budget decision, better to do it now than later. But as a one-time thing to use excess cash for a project or to get you over a hump, I don't think there's a problem. And if you are drawing on cash, sort of the corollary to that is, are you going to be able to replenish it in the future, to get back to where you want to be on a cash position? And then lastly, I think that this process of budgeting, probably just some questions you can ask. Cash balances. This year is interesting. For the last several years, right, you couldn't earn interest on your cash balances. So it was easy to sort of forget about them. They weren't earning anything. So you just leave them in the bank account and be fine. But we're going to see interest rates coming up. We already have this year, and they're going to keep going up. And so if you've been ignoring those cash balances, there may be opportunities to invest them and actually earn some money and make up for some of those inflationary increases that you've seen. Revenues, same kind of thing. What revenues can we count on? What's going on with, category by category? Are we going fine-free? What's the impact of that going to be? Can we afford to go fine-free if you want to? On the expenses, right, there's certain things you don't have control over, right? We're going to talk more about expenses in a bit, but certain things you can control, certain things you can make decisions about and decide whether you actually want to spend that money. Other things, not so much. You're going to have to run the library. It has to operate. The doors have to be open. And then lastly, just, if you have debt, it's you have to make sure you're taking care of that. And you have to keep in the back of your mind capital needs, right? If you're sooner or later, your library is going to need to do some repairs and improvements. It's a building, right? So are you making sure that you're allowing for that when you're doing your planning? And the reason I say that this can work for you in high inflation times is, I'm not giving advice on borrowing right now. I want to make sure that's clear. But if you're anticipating prices going up dramatically and interest rates are still low, doing a project sooner or later can be useful. The other thing is, if debt service is taking up a large portion of your budget, that's a fixed cost. Your taxes tend to go up with inflation. So you have a big chunk of your budget that's fixed, but you're getting inflation on that cost as well. So that kind of gives you a double dip for the rest of your budget.
Jamie, there was a question asked before you move on to that slide. What investing opportunities are available for library districts?
I want to be got to be careful that I don't overstep what I'm legally allowed to do here. But what I will say is you should have an investment policy. Okay, so the first thing is to pull that out and see what it says. Your investment policy, if you have one, and even if you don't, you're still subject to the investment laws of the state of Illinois, which govern what you can do. You are pretty restricted because you're not going to invest in stocks, right? Even if you could, you wouldn't want to, because you don't want to put money at risk. the scope of opportunities is somewhat limited as a result. So you have bank account and money market funds, okay? And there's collateralization requirements for all of these things. This is a very, very top line answer to this question. But you have, you have your bank accounts and savings accounts. You have money market accounts, which provide often a little bit more. You can directly invest in U.S. government securities, like a treasury or a U.S. government agency. You can invest in CDs, certificates of deposit of banks. But again, you have to be careful about government making sure that those are guaranteed and that you're not going over the FDIC limits. You can also invest in the securities of other municipalities. And I think there's a rating limitation on that. And that's pretty much the universe. The bigger question is, or not the bigger question, but an equally important question is, how long do you invest for, right? How do you determine how much money you have and how long you can invest it for? And the reason you want to know that is typically interest rates, depending, the longer you invest for, the higher the interest rates are, right? So if you can push money out, invest it for longer term, you might get a better interest rate. There's a whole strategic aspect to this, though, as well, because if rates are rising and you've just locked in money for, say, 3 years at a lower rate, you're not going to benefit. So there's a little bit of thinking that goes into this whole question of investing as well. But that's pretty much the universe of what you have to invest in. And the trick then is figuring out which are the best to do, where are you going to get the best interest rate, who's doing that investing for you, lots of questions, but high level, that hopefully that's a good answer for you.
I think that's a pretty comprehensive one. Here's another question, a couple of sentences. Is there a guideline for reserve funds cash balances? Do we determine replacement cost for capital items to determine the reserve funds?
Yeah, so I'm glad that question got asked. So personally, I like to make sure that at your minimum, so the cycle, there's a cash flow cycle, right? Because you get your taxes in great big chunks. And so I would figure out where I have the minimum. Everything's a complicated answer, right? I would figure out where your minimum cash during the year is. Usually that's going to be like January 31st or February 31st in Cook County. Elsewhere, it's going to be like May 31st or April 31st. And I like to have 6 months of expenditures. No one is going to complain about that at that time. Generally, well, before I get to that, cutting it down to 3 months, a quarter of your expenditures, I think is very, very tight. So above 6 months, I think that's great. Below 3 months or at 3 months is very tight, because look at Cook County, right? You're gonna have to go 3 to 4 months. And if you're at that 3 month point, you could be facing running out of money. And so that's why I like 6 months as a guideline. Now, that's for operations, right? But also this question of repairs. And I can't answer that question with a number, right? Really what you need to do is you should have some sort of facilities assessment that looks ahead and says, what expenditures are you going to have coming down the pike for those capital needs, right? You can hire a consulting and a building engineer, you can hire your architect to look ahead and say, these things are going to be, these things are going to be needed at these times. And then you set a budget so that you're saving up over time annually, right? So that when those expenditures come around, you've amassed enough money to do them. Or maybe you want to save up for a project as well, and you want to do that too. And so we're not talking about projections today, but that's the reason to have a projection, is to say, can I afford to aggregate enough money, or what do I have to do to collect enough money to pay for these things over time? So that's a harder one to answer without that kind of analysis. There's one other thing I was going to say real quick. well, we'll get to this, I hope. Remember that when you take money and you put it into a reserve, it's probably going to be restricted, right, to only that purpose that reserve is for. So you also have to bear in mind, am I putting too much money away for a specific purpose and constricting the money that I have available for any purpose, to my detriment. So even if you could have 6 months, right, maybe you want to keep a little bit more unrestricted money, knowing that you can always use it at some future point for building if you need to, but you also have it for other things that are unrestricted as well. And anyway, I'm going off on a tangent, so I'm going to get back. All right. Anything else before we kind of go on?
Nothing. Oh, wait, someone just. Do you need a special bank account for capital expenditures, or is the checking and savings or a money market sufficient?
Yeah. So there's another complicated question, but there are funds, right? From an accounting perspective, when you do your accounting reporting, everything is reported as funds. And so you have your special reserve fund, and you have your corporate fund, and you might have an IMRF fund, right? And all these things are tracked from an accounting standpoint individually. But there's no reason you have to keep those monies in separate accounts. They can all be commingled. The reason I said this is a little complicated is the exception that and that's even true for bond proceeds. But if you're borrowing money, if you're doing a bond issue to fund a project, then it is important, not from an accounting perspective, but from a tax law perspective, to keep that money segregated and divide it and keep it apart. The other reason to keep money apart would be so that you don't accidentally spend it, right? You keep it in that fund over there, right? You could say, well, we can't touch that fund because that's our building fund, whereas you might accidentally spend that money if it was all commingled. It can all be invested together. There's no legal reason you have to separate that money just because it's in a different fund. Okay. But you might want to, right? Just for organization's sake. And a lot of people do, and in fact, I'd go even further and say it might be a good idea, but you don't have to. Okay.
No other questions at this point, Jamie.
Okay. I think we probably covered most of this. Monitor your progress through the year. So you've done the budget, right? Track it through the year, right? Are we going according to plan? Are we saving up for this project? Do we have our healthy reserves? Every month, you should be getting a financial report so you can see relative to expectations where you're at. And if something's, going off budget, right, you have a chance early on to ask those questions. There are two ways to look at that. You can either look sort of, what have we spent year to date versus the budget, and say, if we're halfway through the year, have we spent more than half the budget, and why, or less than half the budget, right? Some people like to look at that way. You can look at this year versus last year. If it's nice and stable and you expect things to be stable, you can look versus budget. Oh, and then you can also say, you can annualize these numbers too. So if you're halfway through the year, most things you can project for the full year by doubling, and then do a direct comparison to the budget as well. And just have to think, how do I want to see this? What's going to be the easiest way for me to digest? What's going to be the easiest to prepare and report? Because you don't want to spend your lifetime, you don't want to spend your director's lifetime preparing these reports, right? So, but think about that. Think about, what do you want to see during the course of the year? And you should see something every month, I think, in my view, to make sure that we're on track. Okay. And now hopefully you have a sense of what to look for. Okay, so that's budgeting. The next stage, remember, we had the budget piece, we had the budget and appropriation ordinance. Let's take a look at that. And these will go a little faster. So the B&A ordinance, again, even though it says the budget and appropriation ordinance, it's really not a budget thing. It's an appropriation thing only. And what it does, it sets a maximum expenditure by line item. So you're going to list out all of the things you spend money on, wages, books for adults. You can go into any level of detail or a pretty high level of detail. Different people do it differently. We'll talk about that. But it's setting a maximum expenditure for each of those line items, which may be well in excess of the budget, right? For a couple of reasons. And if you think about it, you take all these maximums and add them all up, you're going to get an even bigger maximum. And so if you think about that as the budget, you'd be like, what's going on? We're authorizing significantly more money than we've budgeted. And like I say, that's okay, because they're two different things. The appropriation is not the budget. So just have that out of your head, even though it says budget and appropriation ordinance, it's not a budget thing. It's also setting a maximum for the levy, fund by fund. So you want to make sure that the appropriation is going to be more than you're going to want to levy as well. All right. So the way this works with the B&A, there's a tentative version that's sort of prepared and it's approved, but that doesn't necessarily have to be a board action. And again, not giving legal advice, your attorney may feel differently, but I've never seen anything that has to be board approved, although you might look at it and say, yep, that looks good. Then it gets posted and you call a hearing through publication in the paper with 30 days notice. All right. The hearing gets held, and then the final version, which is often identical to the tentative version, gets passed, usually at the same meeting as the hearing. And that has to be done by third week in September. I'm sorry, I'm drawing a blank on that because my phone rang and distracted me. So there's a timing. We've said it's not the budget, right? But I will say this about the budget and the appropriation. Your budget is lined up according to specific line items. It is enormously helpful if going from the budget to the appropriation, you use the exact same line items. It's just easier. It's easier for everybody. It's easier for you to understand. It's easier to prepare. And what happens is over time, right, these two things get out of whack because changes are made to how you do the budgeting. Changes are made to line items. You add them, you take them out, and the B&A doesn't keep up. Right. And so it's not something you can go from one to the other. So I think it's worth taking a look at your budget, your line items that you're looking at when you're doing your budget, and then the appropriation and making sure that those are sort of in tandem and aligned similarly. Real quick here. What goes into that B&A? Again, legal question. Everybody's B&A looks different. Right? They're all over the map. So if you're going to make changes to your B&A to line things, make sure you're talking to your attorney that they're approving it and saying, yes, this is still legal. But the basic components are you're going to have this individual appropriation by line items grouped into your various funds. And it's going to add up to a total. That's your total appropriation. You're going to have a statement of funds available. And then some people proactively state what the fiscal year of the library is going to be. Some don't. There's going to be a summary by fund. So you're going to have your general fund, you're going to have your IMRF, you're going to have your, if you keep those funds, liability fund, and so on. And then some people include a full statement of revenues and expenditures, which is a requirement of the law that be done, but not necessarily in the B&A, but some people include it in the B&A. Some counties accept that, some don't. So again, it's a whole legal thing there. Make it better. Do you match the budget categories? We talked about that. Are you showing transfers? How are you, if you're going to transfer money in between funds, how are you allowing for that? You want to make sure that those are showing up, and you want to make sure that it's sufficient to levy what you want. I think I got to go.
Maybe another quick question.
Yes, please.
Can you explain a little bit more about how this might be different for a municipal or a local library?
Oh yeah, sorry. Thank you. Yep. So, sorry. Wow, big oversight there. If you're a municipal library, I should have said that right up front. You're not doing a B&A. You're giving you're probably giving this information to the municipality, and they're incorporating it into their B&A. So for that, wow, I meant to say that right up front. For that, you have to work with the municipality and find out what they want you to give them. They may want you just to give them your budget. They may want you to give them appropriation numbers. It's up to them, but you're not passing this stuff as a district library. And I'm really sorry. And this is true about the levy as well, but hopefully you learned something if you're a district in the process, because you didn't know you didn't need to pay attention.
Another question, what's the best way to determine your appropriate amount? Appropriation, I think they mean appropriation amount.
Yeah, yep.
Formula.
Yeah, so people do it different ways. A lot of people simply take the budget and increase it by 10 to 15%, and honestly, that's probably fine. The exceptions would be, let's say you have a project that you don't know if you're going to have, right? If you don't know if you're going to do it. And you think you're not going to, but you might, or a grant that you think you're going to get, but you might not. You always want to appropriate the full amount for those expenditures, right? Because in a worst case, right, you get the money and you can, or in a worst case, I don't know which is the worst case, but you get the money and you haven't appropriated, so you can't spend it without amending your appropriation, which you can always do, but you have to go through the process, right? So, make sure you've accounted for everything, but generally speaking, you increase the budget by 10%, 15%. Some people do 20, that starts getting excessive, right? That should be sufficient, right? Because your levy's not probably going to be that high either, right? But you want to do like a little estimate of the levy, make sure your appropriation's bigger than that in the aggregate, that sort of thing. Okay, but that's a standard thing, is just a straight 10% increase over the budget, or 15%. Okay. Now let's talk about the levy, and I don't know how much time we have, but it's not a lot. It's not 2 hours. So let's talk real quick about the levy. The levy is the third thing, right? And I just want to make sure, again, definition's very important. We have the levy is what you request to the county, right? That's what you pass and you give it to the county. But then the county takes that levy, they do a whole mess of calculations and figure out what your actual extension is going to be, what's actually going to go on the tax bill. And then, of course, this stuff goes on the tax bill. Inevitably, some people don't pay. So you have to be budgeting for what you actually think is going to be collected, right? You have to allow for levying the full amount, but then you have to actually budget around what revenues are actually going to come in. Usually it's pretty close to the extension, but some places are more financially challenged. They might have collections that are lower. Big consideration in the levy is whether you're subject to tax caps or not. If you're subject to tax caps, then there's a certain formula that determines how much you can levy, or determines how much taxes can be extended. If you're not subject to tax caps, there's different rules. And if you're part of a home rule municipality, then you have the most freedom of all. You can pretty much levy what you want, although the municipality that you work with might be pushing you to not do whatever the heck you want. The big difference to know whether you're capped or not capped, if you are unsure, if you're a district and you're in one of the collar counties or Cook County, or a county that has voted in tax caps, you're capped. If you're in a non-tax capped county, then you're not. If you are a municipal library in a non-tax capped county, you're not. If you are in one of those counties that is capped, unless you're part of a home rule community, you are capped. And I'm just going to go a little faster here. Bear in mind that when you levy, many districts levy for multiple funds. So you've got your general fund, IMRF, liability, building and maintenance, and that sort of thing. And some of these funds come with caps on the tax rate.
Can I ask one quick question that was just entered? If you don't use all the money for appropriations at the end of the project, what fund can it go into?
Well, Can I ask a question? How long we got?
We're scheduled to be till 11:30.
Oh, excellent. Okay, I had no idea. Okay, try to finish
Sorry,
this by
Jamie.
11 o'clock. That's great. Okay, that I can relax. Remember, appropriation isn't the same as actual money. So you're not going to have appropriations left over. You're either going to use those appropriations in a year, or if I'm understanding the question, or you're not going to use those appropriations in a year. The money is we're going to talk about right now, because that does come into specific funds, and there are limitations on where you can transfer it to. So if you have an unused appropriation, it's sort of like a trick question, because there won't be money to do something with that appropriation, right? Your appropriation is your appropriation. If you want to change the appropriation, you have to redo your appropriation. And again, legal question, there might be a nuance that I'm not picking up in this question that an attorney might have to get into. But that's kind of the way I see the way the question's been asked. But let me go through these funds, and maybe the question will be answered another way as well. So you've got your general fund here. Depending on whether you're in a capped county or a not capped county, that has a maximum tax rate, 15 cents if you're not capped, and 60 cents if you are, okay? And then you have all these special funds. Building and maintenance likewise has a maximum rate of 2 cents, but then you have other funds, Social Security, IMRF, liability, audit, that you may, those three that you may or may not be levying for, depends on how you're set up. Those don't have max rate. Why? Because I guess the legislature figured you got to levy for Social Security, you got to levy for Social Security, whatever it is, and so on. Audit has a 0.5 cent. Right, maximum tax rate. And so when you're setting, and if you haven't levied for these things for 3 years, you don't have those anymore. So it's important to look at what you've levied, what you haven't levied in the past, to figure out which of these you can actually avail yourself of. But and for another reason, if you do levy for them, you might want to keep and you're thinking about stopping, you might still want to levy sort of a minimal amount in some of these funds so that they don't go away in those special funds. But the key is, when you levy in those special funds, the collections for those special funds are limited exclusively to those uses. So in answer to that question of leftover money, right? If the money is left over in the general fund and you need it somewhere else, you can put it into any of these restricted funds. But if you have money in those restricted funds and it's just sitting there, you can't get it out. It's restricted to those uses. You can't transfer it somewhere else. So whether that's a budget, you consider that a budget issue or an appropriation issue or whatever, from an accounting standpoint, once the money goes into these funds, cannot come out. And you may also have these additional funds, special reserve fund, construction and endowment, or an endowment. You can't levy for those funds, but you can have them, you can put money in them. And then once the money's in there, it's probably restricted as to what you can do with it, okay? So when you're setting up your levy, you're really talking about, what am I gonna do about these various funds? If you have bonds outstanding, right, there's a debt service levy, you don't have to do anything about that. It's in place. You wanna budget your debt service, you want to appropriate your debt service, but you don't have to, and you'll include it in your levy, but if you screw that up, it's okay. The county's going to get that right for you if there's a levy in place for that debt service.
Jamie, there was another question. If you've never levied individual line items, this is related to municipal local libraries. If you've never levied individual line items, how can you begin?
It has to be done through referendum. Again, talk to your attorney. There might be a way. But and if it's home rule, you might have more flexibility. But basically, the law says if you haven't, the rule I go by, if you haven't levied for a specific line item in 3 years, or you've never levied for it, you can't establish a levy for that item except by referendum. That's to the best of my knowledge. If there's a way to do it without referendum, it would be through a backdoor referendum. That's possible, I believe, with working cash, but I think that's the only one. You can also, for building and maintenance, all right, every year, if you're doing a building and maintenance fund levy, you can establish that's 2 cent maximum. You establish that you have to do this notice and 30-day period every single year to do your building and maintenance. It's not automatic on that one. Okay, you have to authorize it every year. And I don't know if you can do that without referendum if you haven't done it before. That one, I just don't know. You might be able to do that. The law may provide for that without a referendum. Not sure. Same with working cash. Okay. And again, some of these questions is different attorneys may say it differently too. So you want to make sure these legal questions you're going through your attorney. Okay. So let's talk tax cap versus non-tax cap for a minute, because the approaches to the levy are very different. And the idea here is with the levy, you could ask for $1 billion, right? You can levy whatever you want. You're not going to get it because the county is going to take your levy, that's your request, remember, and they're going to do a bunch of calculations and they're going to figure out what the maximum that can be actually extended is, and they will cut you back to that amount. The trick is if you ask for less, right, they're going to go through their calculations and they're going to say, oh, they wanted less, I'm going to give them less. Okay, so you can only do worse with your levy, by not levying enough. And for a bunch of reasons we'll talk about, that's why I always like people to err on the high side with the levy so that they make sure they get all the money that they're entitled to. But if you're tax cap, it's pretty, even though it's a complicated formula, when you boil it down, it's very easy to estimate what you're going to get on the extension. Okay. And it's because the tax cap formula boiled down is very simple. It's last year's extension, whatever went on the tax bills last year, right? And you can see that, you know exactly what that is. That gets increased by inflation. And this year, although inflation was 7.5%, there's a cap on that number of 5%. So this year, you're going to take last year's extension. It's going to be able to be increased by 5%. And then you also get to tax at your tax rate new property. So new property is things like buildings that were built from scratch, things they might have converted from a tax exempt to a taxable use in the past year. TIFs are the big one, tax increment financing districts that have been off the tax roll for 23 years and are expiring. When those come on the tax roll, they get to come on as new property and you get to tax them. And so it's a good idea to keep an eye on those TIFs and make sure you know when they're going to expire. So, but that's it. And that's, if you have a good estimate of that new property, right, you can estimate what the taxes are going to be on that new property. And so you can figure out pretty closely what your extension the next year is going to be. And then you just want to make sure you levy a little bit more than that in case you're wrong, right? The only place you can go wrong is the new property if you underestimate it. But, you know, if your new property has always been about 0.5% of your valuation, maybe you want to estimate, and you know there's no TIFs, maybe you want to estimate that at 1% or 1.5%. Give yourself a little cushion for your levy, knowing that the extension is always going to work out to this little formula of last year's extension plus inflation plus those taxes on new property. And for an example, so here's a library district. Last year, let's say they levied $1,505,487.05, obviously a typo there, sorry. You multiply that by 1.05, right? That's the inflation piece. And if they're expecting 2.5 million of new property at their tax rate, or you want to count that as 0.5%, go through, do that math. The extension for the next year could be expected and budgeted at around 1.591 million. That's what it's going to be. And you know that. So maybe this district wants to levy 1.65 or 1.7 million just to give themselves a little cushion. But they know in reality, they're probably going to get about 1.591 million in their actual extension. Okay. The key here is that every year, if you're tax capped, we're going to talk about non-tax capped in a minute. If you're tax capped, Each year's extension see this right here, prior year extension. Each year's extension becomes the base for the calculation the next year. So if you don't extend, if you don't extend the maximum in a year, right, the lower number is going to come the base for future years, and you're going to have foregone that difference forever, right? You can't get it. So you always, in my view, you always want to maximize your extension, so you're not left in this situation where you've left money on the table forever. Hopefully that makes sense. And in general, libraries do that. The issue here is that if you're going to ask for a levy that's more than 5% above the prior year extension, you have to do a truth and taxation hearing, which is straightforward. It's a publication and a hearing. You can do it. You just have to know that you need to do that if you're going to ask for more than 5% this year, which you likely will, because CPI is at that 5%, plus you want to capture your new property. Now, if you're not capped, okay, it's your EAV that's going to be important, because if you're not capped, it's those tax rates. Remember from that chart before, you have the maximum fund rate of 15 cents, or you might have voted a higher rate or something like that. So that 15 cents is what you're allowed to levy for the corporate fund, right? And so if you think your EAV is going to go up 20%, well, you might, and you want to capture all that, you might have to do your levy, up 20%, right, to capture all of that EAV. The downside of that is if your EAV ever falls, right, your taxes are going to suffer. So it's important in your budgeting to think, do we really know what's going on with EAV? And you can talk to the county, you can talk to the municipalities that your library overlaps with, to try and figure out, what's going to happen with our EAV. So you get that 15 cents, and then you get your 2 cents if you're doing a building and maintenance fund on top of that. But then remember, there was no limitation on some of those special funds, right? So you have to figure out, what do I want to tax for those types of things? You add that all up, and that becomes sort of your levy target. And in another example, if we have a municipality with an equalized assessed value, that is a total property value of 203 million, they get to tax that at their 15-cent rate, plus maybe all those other funds come out to $62,000 for IMRF and for FICA and all of those other things. Then they would have an expected extension of $367,000 if you do that math. So there again, to protect against, maybe we underestimated EAV, maybe they want to do 400,000 or 425,000 for their request. All right. Oh, sorry, I said note here, each year's extension. That's just a holdover from the prior year, or from the prior slide. It has to do with caps. So here you just want to make sure you're aware of what's going on with your EAV when you do your levy. And again, if you're going up more than 5% because you think your EAV is going to take a jump, you need to do that truth and taxation hearing in order to levy above 5% more than last year's extension. And same thing here again, I'm for levying as much as you can possibly get. Any questions? Because that's pretty dense.
No new questions.
Okay, great. All right, reasons to levy the maximum extension, we kind of covered them. In addition to maintaining the levy for the future, inflation. Remember, this year, your revenue, even though you're experiencing inflation, your revenue is coming from last year's levy. We talked about that before, and that only went up by like 1.5%, 2%. So you're going to be falling behind a little bit this year. Next year's your chance with that 5% CPI. Next year's your chance to catch up. And so, I'm in favor of that. And inflation was 8.5%. So you're actually falling even further behind this year. And 5% won't even catch you up, right? Employees are hard to maintain. You need that financial flexibility to do that, to keep your employees and attract new ones. You're going to have capital needs. We've talked about that. And so, if you don't levy everything, you're harming your ability to take care of the levy in the future. If you haven't done that analysis of your reserves and you don't levy everything you can, how do you even know, right? If you're harming the library, if you haven't done that analysis. And then last thing, the thing I talked about, that you're experiencing inflation now, but the revenues are going to lag. for a year. So all reasons, in my view, to make sure that you're always levying what you can get.
There's another question,
Yes, please.
Jamie. Does just holding truth in taxation hearing allow us to raise the tax levy greater than 5%? Or would it have to be put to the vote of the members of the district?
Nope, just the truth in taxation hearing. Right. And in that here, and no one can stop you from doing it. You know, basically that truth in taxation hearing is saying we're going up more than 5%, we're levying this much, and it's a X% increase, and so we're giving you notice. And if you ask for more than 5% and you don't do the truth in taxation, or you screw it up, it's not the end of the world. It's just that the county can't extend more than 5% more than you did the prior year. You know, if they don't have proof that you did the hearing. So it's not like your whole levy process goes out the door, but you won't be able to get more than 5%. They'll have to cut, if their calculations came out to more than 5%, they can only give you the 5%. Okay. Yeah. So no referendum or anything on that. Okay. Quick look at the levy ordinance. Oh, I forgot to do something, but once again, everyone's levy ordinance looks different. Same thing. Talk to your attorney if you're making changes. Same concept. Basic components. It incorporates the B&A by reference. Like, so you're always going to say, you're always going to reference the B&A and say that it's pursuant to that you're doing the levy. Same thing. You're going to list out your levy line by line. And again, it helps if these things are all parallel, because you just follow right through and it makes it easy. So if they're out of the whack, it's worth a quick look and say, do we want to align these things? Lists out the levy, yeah, line by line. Levy has to be less than the appropriation. We talked about that. And then other things people do, you can either, again, talk about only funds to be raised by levy, or you can talk about all sources of revenue, including the levy and other sources of funds as well. I don't know why people do one versus the other. You can repeat the appropriations, and that's not necessary, but it's kind of useful. So you can go down and make sure that the appropriation is bigger than the levy in every case, right? You've got sort of right in front of you. You can levy less than budgeted expenses to bring fund balances down. So why would you want to do that? Let's say you have too much money in your IMRF fund, right? And you can't spend it. You've just accumulated so much money there that it's just too much. Well, you can levy less than you spend in that fund, less than you've budgeted to spend. And that way you'll run a deficit for the current year in that fund and bring the balance down, right? Because you can't bring the balance down any other way. You can only spend that fund on IMRF expenses. And if you have too much money, right, and you keep levying what you spend, there's always going to be too much money in that fund. You can't transfer it out. It's restricted, right? It's one of those restricted funds. So the only way to bring that balance down is to under levy and overspend, and over time you'll spend those balances down. So there's good reason to keep an eye on your fund balances and make sure they're appropriately at appropriate levels. How can you make the levy ordinance better? Make it match, make it align with the budget and the appropriation. Make sure that you've gone through that check to make sure the appropriation exceeds the budget and the levy. And make sure, again, that you've gone through that calculation, that you've maximized the levy. And just to see this real quick, I think we're doing okay now on time. We're back. Mm-hmm. Here's budget and appropriation ordinance. Back to that. I forgot to show you this in the first place, but here's an example. I'll just sort of scroll through. This is one example of budget and appropriation ordinance. And here there's a sort of a statement of the fiscal year beginning July 1, 21, ending June 30th, 22, right? The law says that you're supposed to establish the fiscal year. Some people actually proactively say our fiscal year is. I'll show you that in a second. Some people just kind of refer to it that way. It's a little vague, again, legal question. But here's all of these personnel lines we're appropriating just line by line by line. This looks like someone who doesn't separately keep IMRF funds, FICA, or other things, but here's just line by line. Here's the appropriations, and this is what it looks like. And hopefully these lines line up with their budget, and so you could compare the appropriation to the levy. But also notice, right, this is just the appropriation. It has nothing to do with the budget here. Okay, we're going to see in a minute. And then as part of this, they've included this statement of revenues and expenditures, and you can see here, right, cash on hand at the beginning, cash expected to be received, expenditures. So this is revenues and expenditures, which allows you to calculate cash expended to be on hand at the end of the fiscal year, right? Then an estimated amount of real estate taxes. So you're anticipating the levy. This is a little bit of a vague number. You might want to decide what that number is. Different people approach it differently. Some people make it the levy, right? They just say, well, we're paving the way for the levy, so this needs to be the levy. Some people say, well, no, we want to make this our budget number because we need to know how much we spend. So they're looking at what they're budgeting. This number, it's an estimate. So people get hung up on what this number is. But in reality, I don't think there's any real legal guidance for it, but you got to ask your lawyer, right? I've just never heard of any. And then estimate of other sources. So this is a statement of revenues and expenditures embedded right into the ordinance. And that's about it. It's pretty simple. Here's another one, okay, where they did put the budget next to the appropriation. So they can go and you can see that those numbers are very different. This is probably 20% or 25%. Well, some are bigger, some aren't. It's not clear exactly how they did it. Maybe it's 20% bigger. Looks like 20% bigger for the appropriation, right? But you can see, you could go through and make sure, is every time the appropriation bigger than the budget, right? And then for the statement of revenues expenditures, they did the same. They did the same thing, revenues, expenditures, it's all embedded in here, but they didn't do, oh no, they did do sources. But then here's the last one we'll do real quick. It's in a sort of whereas format, the others weren't. Same thing. But when we get down to with the appropriations by fund, right? Everything's by fund, whereas that first one, it was all grouped together. They probably weren't levying by fund. Here they are. But when we get down to here, what's missing? These guys did not include that statement of revenues and expenditures. They probably do it in a separate document, right, and file it separately. So lots of variations on these things if you want to do that. And then so that's 3 examples. And then here's the levy. Okay, just a couple examples on the levy. So here's someone. I think this is final. Yeah. So here they restated their appropriation, which is not necessary. They didn't have to, and they didn't even give levy by line. Okay, they just did levy in the total, right? And I kind of like that if your lawyer says it's okay, because why do you want to limit yourself line by line? Does that even make sense? You levy for the corporate fund, and the levy is less than the appropriation, which is what we want. And then for each individual fund, same thing. They show the appropriation, they show the levy, and it's useful. Except here, look what happened here. They levied more than they appropriated. I'll be darned, and they did it here too. All right, so that should have been a flag, right? We should have said, wait a minute, we're not allowed to levy more than, does anybody notice? Does anybody care? I don't know. But if they would be subject to a tax protest, assuming this is the final version of this thing, right? If they levied 148,000, someone could come say, no, you can't levy more than 141,000. And in fact, the county, well, that's bonds, so it doesn't matter. But this one, right, can. Someone could say, no, you're not allowed to do that, or the county should reject that. Actually, maybe those numbers are just backwards. So this is kind of this. Hopefully, this was not a final version of this one, but here they fixed it. So they were in the wrong columns up above. That's all that was going on there.
Jamie, a quick question, seeking some clarification on the timing of the Truth and Taxation hearing. They said, does the Truth and Taxation hearing have to be held before budget and appropriations, or just before the levy ordinance?
No, just before the levy ordinance. Okay, Sorry, I misspoke. It's still wrong here, right? 36 versus 35, 148 versus 141, right? So if you have these things side by side, it's easy to flag. You go, hey, wait a minute, we're not allowed to levy more than we appropriate. Let's back up. Okay. So there's two examples there. All right. So we go back to the other. Assuming I can do that. Hang on. Okay. So, now one question I get a lot of is, we showed these levies for individual funds, and there's a perpetual question that gets asked is, should I levy for and maintain multiple funds? What are the advantages and disadvantages? And there's both. And I used to think the best, simplest, just to get rid of all the funds so that you don't have these restricted amounts accumulating. And I've started thinking differently about that lately. The advantages of levying just say for a general fund is, the advantages, let's do the advantages of multiple funds first. Remember, the general fund has a maximum rate on it. So if you are at or near your maximum rate, having multiple funds allows you to get extra money in excess of that maximum rate. Let's say you're near your maximum rate and all of a sudden your EAV falls for some reason. There's a real estate crash, right? And that puts you above your maximum rate in that fund. Remember, the way tax rates are calculated, it's the amount that you levy divided by your EAV. All right, so if your EAV falls by half, your tax rate's going to double. It's an exaggeration, never fall by half, but you get what I'm saying. A decline in your EAV pushes your tax rate up. And so as a result, you go over the maximum, right? The county clerk's going to have no choice but to cut your levy back to that maximum fund. So if you want to guard against that, maintaining the ability to levy in other funds is very helpful, because if you were ever worried about that, you could make up the difference in those other funds. Although remember, the money in those other funds can't be used except for those purposes. So that game can only be played for too long before you just have too much money in those other funds. But still, it's a protection against that type of situation. It also helps you identify clearly what you're using funds for, even though you're stating it elsewhere, right? To the community, they can see you're not just levying the slush fund, that you're using the money for IMRF, that you're using it for liability and that type of thing. And also, if you're accumulating funds, right, you can be subject to a tax challenge if your fund balance starts getting up above 100% of expenditures. It's more complicated than that. But if you're starting to accumulate too much in funds, having these other funds to accumulate money in as well could be a helpful way to accumulate extra dollars. If you just goof up on the EAV estimate, right, and you thought it was going to be higher, it turns out to be lower, there again, it's an outlet to be able to levy in these other funds. The main reason I'm now favoring multiple funds is you never know what the state legislature is going to do, right? If they somehow change the maximum tax rate in the general fund, right, or they froze taxes in the general in your corporate fund, right, you would have protection because you'd still have other places to levy. And that's the number one reason. It's the state of Illinois. Anything could happen. So that's my number one reason to maintain, if you've got these other funds, to just maintain them. Even if you levy $1,000 a year in them or whatever, just having them can't be bad. The disadvantages are, as we spoke, once once money comes into those funds, it's restricted. It can only be used for that purpose, right? So you're kind of limited. Often people accumulate too much money in those special funds and they're subject to tax objections. The real advantage here, the real trick is you're a library district. So the sums of money are pretty limited. And I'm not really aware of anyone actually objecting to an excess. I'm not saying it hasn't happened, but I'm not aware of many tax objections for libraries just because it would cost more than the potential for a refund. But If you have extra dollars, it's subject to tax objections.
There's a couple questions raised relative to truth in taxation again, Jamie.
Yep.
The first is the truth in taxation is only used when the EAV allows for it, correct?
Not necessarily, right? Well, yeah, okay, so yes, put it this way. Anytime you want to levy in excess of 5% more than last year's extension, you have to do the truth in taxation, right? If you think there's no way, if you're non-capped and you think there's no way your EAV is going up more than 5% and you don't want to bother, yeah, then you don't have to do the truth in taxation. But if you're wrong, right, and you levy too little and your EAV goes up and you didn't capture that money because you didn't want to do the truth in taxation, you're going to be leaving money behind. The good news is in that situation, you're not capped, so you can get it the next year, right? There's nothing that says you can't go back and capture the additional value the following year. But something else I was going to say about that, but yeah, so if you want to capture the EAV and it's going to go up, you gotta go through the truth in taxation.
The second question was, if the truth in taxation hearing is held, are we still limited to the 15.15 cent rate?
Yeah, yeah, those fund maximums apply no matter what. Yep, you're just enabling it, you're just giving yourself the legal, you know, you're going through the legal hurdle of levying more than 5% more than the prior year extension. Okay. Otherwise, the county can only go up by the 5%. Okay. So let's just talk just a couple last slides to wrap up, because I said I thought it was important in this time of it. So that's the budget levy cycle. We're pretty much done with that. And if anyone has questions about cap versus non-cap, that sort of thing, let me know. You're coming up, you have a situation right now that I think is worth commenting on with this massive inflation that seems to be persistent. I just want to say that warrants really thinking about what's going on with the budget more than you otherwise would. And just prepare to be disciplined, you know, decide what you're spending. You may have to cap people at expenditures in your materials or something like that, and hold people accountable. You know, let people know, make sure that people are aware of the limitations that you're placing. Be prepared for tough discussions. You know, someone might not be used to like being told no, right? And most important, don't make individual exceptions, right? Don't make an exception for one people. That backfires massively. And I've seen it way too many times this year, where someone gets, you know, a special raise or special dispensation, and then all of a sudden it's every employee's up in arms. You have to make your rules this year. People talk a lot about job enhancements. What can you do to make your existing employees happier? Whether it's, you know, just sort of little benefits like occasional lunch, just what, or whatever. I don't know. I'm not creative in that stuff, but as other people are. But retention is going to be easier than hiring new people. Substitute, right? Same quality for or sufficient quality for lower cost, or use less, right? You might want to look at your energy use management, control your building, lower your thermostats, whatever it is, to save some money. Those electric costs could be going up substantially. If you're a municipal library, you might be lucky and get free electricity. Again, go back to your strategic priorities. Are we really spending where we need to spend? The other thing, huge savings, right? Although it's not something any director wants to hear. Can you delay hiring? You know, can you outsource or insource certain things? What are we doing with contracting? But if you delay hiring for 2 months, you just saved a lot of money. And remember that this is coming, all this inflation is coming at the same time your residents are going to start using you more. So you have to prepare for that. And you have to make sure you're aligning things so that you can handle that increased participation. And lastly, it's a continuous process, right? You want to know, you want to communicate. What do you want to see as employees, as board members from staff to make sure that you're following your budget and appropriation process accurately? What do you want to see? What do you want to have reported to you? That's going to get communicated. You're going to watch it. It's going to be reported. And then you have to decide as you go through the year, do we have to make changes? You know, is stuff that we didn't expect happening such that we may need to, you know, do things a little differently. So I just wanted to make sure we covered those things. So you're starting to think about it, because I think it's going to be important as you go through the year. And I think that's it. So I'm hoping we have a couple minutes for questions, if there are.
I have a couple already for you.
Good.
Relating to investments, can a district library invest in I-bonds?
No, I don't. It's interesting. I don't think, first of all, I think there's a 10th. I'm telling you everything I know about I-bonds that my 29-year-old son taught me. So, and again, I'm not an investment advisor, but as I understand it, I-bonds, you're limited to $10,000 and it's for personal only. But I don't think, I think the I-bonds aren't going to get you very far. And again, I am not an registered investment advisor, so I got to be careful here. But if you're talking about TIPS, which are inflation adjusted securities, those are subject to principal fluctuation. And the last thing you want to do is invest in something where your principal can go down, in my view, not as an investment advisor, though.
This will be an interesting question to hear you respond to. How much can we have in our savings vehicles, CDs, money market accounts, to be fair to the taxpayers?
Well, I'm going to be as diplomatic as possible about this. My throwaway would be, you can never have too much money, but certainly you can, right? If you have more money than you know what to do with, and you have nothing to do with it, right? You have to start evaluating where you are and how you got there and why. Now, there's a lot of possibilities here, right? One is you might not be spending enough money, right? If you look at your library with respect to other peer libraries, and you're not spending as much, and you have a strategic objective that you can fulfill to better serve your community by spending more money, I think that's completely appropriate to have that conversation and say, why, you know, are we basically more focused on being financially conservative than we are on serving our community? Okay, and by the way, this answer is completely situation specific, so it's impossible to answer. But the other things I would be asking is, you know, have we done a proper building analysis, right? Are we providing for future needs? Because that could be a substantial amount of money that you need to salt away and save up. But it's also possible that you've done all those things. You're serving your community well, you've provided for all your capital needs, and there's still just money left over that you can't figure out a way to spend. Well, you know, in that situation, you might, as a board, come to a prudent conclusion that you don't have to levy this year for everything, every dollar, and giving up a revenue stream doesn't hurt the operations of the library and is, you know, is helpful to the community. But you also have people who are completely, you know, boards now where there's certain trustees who are completely focused on cost control. They want to provide the minimum service possible to the community, and they want to do it by reducing the levy. And I think, you know, you have to evaluate that as well from the perspective of, you know, what the community wants, you know. So in general, I think you're on the library. I'm going to put myself out there here. You're on the library board to provide the best library services to the community. And if you've done that and there's enough money left over, then maybe you want to cut things back. But in general, let's make sure we're serving the community to the best of the library's ability before you do that. But okay, I think I'm hanging out there on that answer a little bit.
I It was a challenge, and I think you met it admirably. Are there other questions that people have? We are getting close to the end of our time frame here. Anybody has any last minute question they want to throw out there, let us know real quick and we can move to that question. Otherwise, in that event, Jamie, thank you so much. As always, when I hear you discuss the budgets and appropriations and levies, you offer important information that I really need to know to serve as a responsible trustee as we try to oversee our financial matters at our libraries. So thank you. And thank you all for joining us today, taking part of your Saturday morning to come and learn a bit more. I hope that what you've learned will help you feel empowered to take back what you learned here to your library and assist in your budgeting process. Special thanks to Cindy Robinson, the ILA staff liaison to the trustee forum. And please feel free to get in touch with me or with ILA if you have any questions about the trustee forum or nominating someone for Trustee of the Year award. Have a great rest of your weekend. Thanks, everybody.
Thank you, everybody. Take care. Bye.